Ben Bernanke, you were arguably the most exposed individual in the whole world at the time that the financial and economic crisis hit. Were you aware of the burden of responsibility on your shoulders at that moment?
So I was extremely aware. The media wouldn't let us forget. The politicians wouldn't let us forget. Hank Paulson and I went to President Bush to talk to him about the crisis in September '08, and he basically said, "You guys are in charge, and whatever you do, I'll support you."
The amount of noise was extraordinary. How difficult was it to make rational decisions?
It was extraordinary. It was a global financial crisis. The news media, of course, were playing it up as they appropriately should have. Inside the Fed, there was a cloistered feeling at times, and we were able to sit and think and to analyze. And I always tried to focus on the immediate task, the testimony the next day, the memoranda I was working on. So I did concentrate on what had to be done.
Nothing quite as severe as this had happened since the late 20s, early 1930s. How prepared was the Fed as an institution to deal with these events?
Well, there had been some work done after 9/11, which obviously disrupted the financial system quite severely. So there had been some work, contingency planning, things of that sort, but nothing really prepared the Fed or anyone really for a crisis of the scope and the nature of the one we saw in 2008.
Now, one of the things you point out is that over here in the UK, the governor of the Bank of England was very concerned about what economists call moral hazard, which is the idea that if you bail banks out, they then are more likely to take risks in the future because they know they're going to be saved. Why were you less concerned about, in a sense, rewarding banks for bad behavior?
Well, it's a perfectly legitimate concern, first of all. And early on in 2007, we were trying to balance those issues and try to figure out what the right response was. But there comes a time when the situation is sufficiently severe that you have to respond. In order to punish some individuals on Wall Street, you don't want to bring down the entire economy. And what we tried to do when we could was to make sure that the companies that were being helped did not benefit any more than absolutely necessary.
Pulling together all your experience of the last few years, do you think politicians and indeed people expected rather too much of central banks and should have expected rather more of governments?
Yes, I think that way too much of the burden has been placed on central banks. And it's ironic, people complain about they don't like quantitative easing, they don't like low interest rates. Well, the central banks are trying to use the tools they have to accomplish their objectives. If you had a more balanced monetary fiscal mix, for example, and I'm talking about the United States as well as Europe and the UK, then central banks could do less, and some of those concerns would be less salient.
Have the politicians learned those lessons?
No, I think politicians have been too focused on near-term budget cuts in all of these major countries.
Actually, I have got one slightly more trivial question. Is you became a sort of brand for the world. You know, the on YouTube, all over the internet, was this idea of the Bernanke, not the Bernanke as it happens, but the Bernanke saving the world. How did that feel?
Well, I don't think the Bernanke was actually a very favorable thing. I mean, I was obviously a big part of on both. Those who favored what we were doing and those who opposed it. I was a symbol of that, and it's not always very comfortable, but it comes with the job.
Ben Bernanke, many thanks.
Thank you.